evident towards a more sustainable growth pattern. We are very happy to welcome today our panelist, Mrs. Nicole Finopoulou, who's a practitioner, a law practitioner, legal practitioner with an experience that extends to the last 2 decades, having completed her studies in the UK, the Universities of Leicester, and then a master's level degree at the University of London, the UCL, the University College London. And importantly, she has, in addition to her experience in issues relating to capital markets, financial services, banking and finance, she has recently become an alumni of the Cambridge University Institute for Sustainable Leadership. Therefore, she has both practical and theoretical understanding of this current issue. And we are very pleased to have her today with us. I would like to welcome him, and the floor is yours, Nicole, to start your presentation. Please allow me just a second to inform the participants that they may raise their questions through the Q&A box, and I will be noting the questions, and at the end we are going to allow some time for questions and answers. And then we can discuss any queries that you have. So I welcome all of you once again. Nicole, the floor is yours. Thank you.
Good afternoon, everybody. Thank you, Adonis. Thank you to EIMF for hosting this very interesting event this afternoon, which, as you said, is an upcoming and very and the upcoming for all things, is connected to everything. This today, as discussed before with EIMF, our intention is very briefly, very introductory, to cover the picture and the whole puzzle, how it's connected, but then at the end we will focus on what is now up and live coming as to sustainability, sustainable finance and ESGs, especially for banking and investment funds, the regulatory awareness of 2021. We will focus on what is effectively in EU, but we will go through some background information for ease of reference for everybody. We consider, as an introduction to this, to go through some background information as to how we have ended up and how we are today, this new era, as we say it, of regulations for banks and investment funds and generally for the industries, the sustainability. Okay, I believe you all see, this is a very brief disclaimer warning. As you're here, you're aware of cybersecurity. Very briefly, as I noted, our agenda will focus today on banking and finance, very snapshot, what is in EU. Then what is now up and running since August 2020, the EU taxonomy regulation, which is sustainability, NFTR and SFTR. And then at the end, a very snapshot, what also is coming up, the sustainability linked loans, which is not only for banking and also for investment funds. Very background, very briefly, this is where we came and how we are and how we're connected. We are focusing only in Europe now, all started in 2009 with the financial crisis. 2012 came out the banking union scope, 2014 the investment plan for Europe, the Juncker plan, and then in 2015 the action plan on building a capital markets union. We consider more easier to have it on a table, which you will see it's all connected. Effectively, to have all this, it comes down to 41 topics for banking and financial services, and all are interconnected with G20, IMF, FSB, ECRP, all the known European authorities, which each has its own mandate, but are all connected. So effectively, now what they are focusing on European Union level is what is known capital markets union, which all the financial markets, the products, including also financial reporting and non-financial reporting, we'll see shortly. So what are the synergies between banking union and capital markets union, which effectively come down to the investment plan for Europe, for growth and business in Europe and support of all people. So they're all connected. I hope you can see that. This is very brief, this one. So the banking union, the BU, is the resilience of the banking sector, facilitates the banking consolidation, and the capital market union contributes to the diversification of finance across the economies which is the financial products, the financial services, pensions, and what is related also with people. So coming now to the today, European Commission in 2020 restated and reinforced his action plan for Capital Markets Union, especially in September after COVID, came up with an updated new revised Capital Markets Union, which is the COVID, and then the investment plan for Europe updated, which is the key pillar of Europe. I will note that last 2 weeks ago, it was the 10th annual general meeting of the ESMA, the European Regulator Competent Authority for Financial Services. Also, it was the 10-year financial annual conference of the European Banking Authority on the same time, that they all reinforced that effectively the core is the retail investors, despite the banking, despite the eligible investors, all comes down to how they wish to protect retail investors, which is actually the people. So all comes down what investment is made, how investment is made, how products are protected, how they will end up to the retail investors. So to go back and to start where it comes us to come to sustainability, which this is the puzzle that adds everything, is that if you go back in the Treaty of the European Union is a crucial mandate that the European vision is for a sustainable development of Europe based on balanced economies, growth and price stability, highly competitive social market economy aiming at full employment and social progress with high level protection and improvement of quality of the environment. This is actually stated in the European Union Agreement. And this started to be reinforced since 1992 after Maastricht Agreement, where it started the Capital Markets Union, the Banking Union, the Euro, and everything is interconnected. So as to come down to sustainability and the focus today, which how is connected, the mapping is where comes from now EU. EU comes now to commitments it has made and how things to grow effectively, coming out from the 2030 agenda of the United Nations, the known SDGs, the Social Development Goals, which are 17 and 169 targets, which effectively are reflected thereafter to the ESGs, which ESGs means environmental, corporate and social development, the factors. Then the EU, to be able to implement the Sustainable Development Goals, proceeded with its own agenda to partner, therefore the ESGs arisen, and then also is a party to the high-level political forum on sustainable development, which is led by the United Nations. So it's a connected thing. Now we're connecting the dots. This is what EU Commission goals are for the period 2019-2024, which includes everything. Therefore, what sustainability, what sustainable finance, and what corporate social responsibility come together? All together means sustainability. So the target, as we'll see later, of European Union is how you manage to be able to show that you are committed to sustainability in whatever level, in whatever context. Sustainability may mean a lot of things, but it has three components. Sustainability is, as we said, focuses on meeting the needs of the present without compromising the ability of future generations. So it's economic, environmental, and social. Formally also goes to profits, planet, and people. So means sustainability means meeting own needs without compromising the ability, what we will do in the future. So after us, who will come? That includes the CSR, as you know it, the corporate social responsibility, which we'll see in a while. And sustainable finance actually means how you finance the operations and the businesses and the investments in EU as to be actually this finance to result in targets and goals and operations that they will give you sustainability, the whole package. And in this part, that is known as one of the parts, the internal organizations, what they have to do is the corporate social responsibility, the CSR. It's a management concept whereby the companies integrate ESG concerns in their business operations, policies, and interaction with their own stakeholders. It's an internal status. It's a self-regulatory business model but effectively it shows how a business on its own is sustainable and how can be seen as sustainable business. It's not only, we can see it, we have seen it, and it's a big dimension that is the charity. It's not the charity. Charity can be one part. We have some time, we can show this. I would like to share with you a video that was prepared by the European Union, which is very short, but effectively it adds all the dots together, what sustainability means. Sorry, just a second. Can show. I think we have an issue here. We'll try to share later. I think, Adonis, I don't know if you...
we can go on with the presentation and
come back on the presentation. We can have it at the end. It's yes. It is not in our favor now. You can see the presentation now, or it's not sharing? Let me see.
Not yet, sorry.
Yes, IT. Okay, hasn't failed me yet. Okay, so we move on. This is as a background. So as to come now, what is now and what will be the focus today, I will not go through the CSR. We said the rule of thumb is internal, is that every company has to have an ESG program and policies internally and how it operates. One part of it is their internal policies, and then we'll focus on banking and financial services. This means the products, the investment advice, and what customer and regulatory reports have to be shown. This came out to be, as we said, preliminary, and that now we're focusing what is important now. I mean, what is now up and running, because we will see a lot of things are up and running, will be up and running very shortly. But the first one that came now live is a taxonomy regulation, which effectively the taxonomy regulation is a classification system. How it came? The thing is that these actions, we brought there, what we mean ESG initiatives, came out again from the 2030, but for example, taxonomy regulation now introduced sustainability classification system through which investment firms must classify investments based on NFRTR data, the non-financial reports, we'll see shortly, and the sustainable financial disclosure report, which effectively has now imposed, these two have imposed additional disclosure compliance policies that have to be applied by the financial market players. Just to go back, just to know where this came from and why we have seen all this sustainability and obligations that EU has undertaken, why this is the first, because it's a primary that European Union wishes to comply with, primarily with the climate change, as is noted, as to be compliant under its obligations under the Paris Agreement, which the Paris Climate Agreement primarily focuses as a priority first to make changes to the climate, how you support climate change. The others are there, but now they have to. That's why the European Commission, the European Union proceeded primarily with these two regulations, where others are upcoming. So this is the summary. All the 17 SDGs, how be transformed and how translated into European Union level. As to the ESGs, the European Green Deal. So it doesn't mean that you have to do everything. Each business, each organization will select and will see where they want to focus. It cannot have to be one, cannot have to be 10, cannot have be all the 17. It's a business policy decision, but it's a thing that all CEOs and all COOs have to consider in their industry. Just briefly.
Nicole, before we go to the next lecture,
Sorry.
because we may not have time at the end to show the videos.
Okay, we can show.
The suggestion, if you can, when we come across videos, if you can copy the link in the chat box.
Okay, we'll do later. Yes.
So yes,
good
so
idea.
it will be available to. Yes, but we can look at it later. Thank you.
I will look them up. We can put them in the chat. That's
Yes.
good. Yeah, very good idea. Yeah, to save time, better. Okay, these other two, the following three graphics is just an illustration how everything is connected. So you may have corporate social responsibility, which is one part, but then you have the whole sustainability, which is the other part, but all are connected. So what we have as EU regulatory regimen and what is coming up, which mostly effectively, and it's applicable and will be applied shortly, if not already some businesses apply that for banks and investment funds, investment services, which effectively is how you offer. This mainly affects asset managers and how they have to be compliant and to be ready to be not only through the regulator, but also first internally to their businesses. It's interconnected. It's a teamwork. It's not one unit on its own. Every unit has to connect the dots with its business and its business internally, operations, and what outside. Fast forward. Non-financial reporting, we said before, is the non-financial reporting, which effectively is what ended up to be the CSR way and reporting. It's corporate governance issue. It has impact to all applications. Actually, this is applicable since 2017. For Cyprus, for people who are in Cyprus and listening us for Cyprus, this is already in place in our local legislation. Just to say a note here that directives have to be transposed in the local legislation, regulations have direct effect. So this is applied, so it's corporate governance. Then we have the CRD2, which is now up and running. Even now, in most of the Europe is already applicable. In Cyprus and in Ireland are within this week, they will be applied, which also again has to do with the corporate governance. So you see, it's not only about what you sell and what you do as an asset manager. It's also what you do in corporate governance as a business. So that's why they are all interconnected. Then, which is also now up and running, that's why the two high levels, as of 10th of March 2021, is the Sustainable Finance Disclosure Regulation, as you know, the SFDR, which has a lot of reporting to be done to clients, not only outside, but also internally. You have to be able to comply and show how you ended up to do the investment policy you are doing. You have to have in place investment policies. This we'll see in a while little bit more in detail. Then it will be the benchmark regulation, which already is up and running since September 2020. It's a regulation, which effectively what is designed therein is the climate. So if you are using benchmarks, you have to have a look at this, depending what you are doing. Then is the prudential regulatory, which it integrates ESG risks. Effectively, this one refers to SRR, SRDs, and IFR that I'm sure you're all aware of. We're expecting the technical regulations, but they're there. They're up and running. It's just they're not so effectively now. They will be in 6 months. Then is the taxonomic regulation, as we said before, which it contacts everything, which will have critical selective criteria. This one will most effectively come into play, we'll see, when we have the regulatory technical standards, where the criteria will be included. Now the problem we have as practitioners is that we don't have standardizations, and this is what this will aim, the regular technical regulations. Hopefully we'll have something more, and we will see later what is used now and what can be used as a standard form with all the risks that are there. Then we have the EU Green Bond Standard. It's pending, it's soon to be happen. The other thing that actually is running and you can utilize, but this is mostly for people that they are supporting the development of product, is the eco-labeling. There is to have an eco-labeling, which effectively, this is the first time that if you are supporting products, the European Union actually is the first time that has set up a specific unit how you can get this labeling on your products. And products, it means everything. Just for an example to say that what is good, I think you all know now if you go to a supermarket, you have to get the environmental bag. If you don't get the environmental bag, then you will pay. But that environmental bag, that's an example, has this label. So the people behind it, the business, or who had to finance this business, had to check this. So it comes down to precondition and how you structure your products. Okay, and this is up and running. And the future initiative, which is ongoing, with all the regulatory, and this is just an update, what is coming. What we said, all the regulations that were listed above, all the 9 pillars, this is also how it's going. So because all this is going, because we will end up to have regulatory technical standards and to have criteria in combination with what we have already now and we have to apply. So this is the whole overview for this, how to manage sustainability in Europe and how you can, what you will have to comply depending on where you are, either as a fund, if you're an asset manager and you're structuring products, if you are selling products, or if you're a bank and you're setting up a product to offer to a client, and then how you, what conditions you will want for such product as to qualify as sustainable. This is a summary. This is the whole thing. This is developed, was issued by the European Banking Authority and then the European Commission. What are their policies, which is the summary of all. This is where we started. This started from 2018. Now we're in 2020, up and running as SFDR and FFDR, which is the responsibility of enterprises of their own impacts on society. This is what it comes down to. Very brief summary, how all connected for the taxonomy is the 4 labels under the taxonomy, which you have sustainable finance, the SFTR, the regulation, then is the green bonds, and this is the disclosure, and also the benchmark regulation. This is what is now live, up and going. So if an industry or if an entity is involved in this business or is offering products under this business, should definitely look into all the obligations on this regulation and to apply them, or has to explain why they are not applying it. This is very briefly to show you how are all interconnected. The scope of our, as discussed with Adonis and Marius and EIMF, is the scope of this today's interactory just to see that everything is connected. It's not each on its own. So it's not that all the business has to be aware what it's doing. If it's a fund and doing asset management and offers products, or if selling offers or distribute, depends, or setting up. So it's all connected. So this is the SFTR. What is now? This is now up, is the first. It's up and running since March. It's a regulation. So no transposition. We are expecting the technical regulations that will give more information. But now we'll see what you can do and how, what you can consider to be a comply, because definitely you have to comply with the articles, the specific articles that need to show what you have comply or not. That's not criteria. This is mainly on reporting, on that you have available your policies. It's like consider I will go to the MiFID, or as you are in banks or in the asset management, you know that you have to have pre-contractual presentations, pre-contractual documents. It's like this. So how these maybe have to be updated to complete the new regulations and what you are doing as a business as to the extent possible. So you have to be able to offer information to your clients and to your investors and your stakeholders. So as you see, is mandatory what you are saying about giving information at firm level. So what you are doing as a firm, then how you are doing the business. And also you have to say, if you have sustainable products, what products you consider sustainable and on what grounds. And all these also have to be available on your website, or if requested, to be able to make it available electronically. Leo, again, it's all transparency. You have to be transparent of what you are doing. This is for you a very brief summary. It's a table, it's a puzzle. So, and all come down back to sustainable bonds. For example, what can be considered a sustainable bond? We have a very good guidance from the European Investment Bank. Then it's on each government how these will be given benefits for tax or other benefits. But this is something to be seen at the government level, at each jurisdiction. But there are the templates that can be considered and developed on there to move on if you want to apply, for example, sustainable bonds, to have such products. This is very briefly the summary. So by the end of December 2022, all criteria under this regulation will be up and running. But so far, you have to consider what else can you use as to be ESG compliant in respect to this regulation. The thing is that under the regulation, the technical regulation is coming up, is where, because all have to be, each competent authority in each jurisdiction will decide a uniform approach and what penalties will apply and what they're expected. Now it's open. Now it's more like name and shame, but the obligation is there. Just for you to see that everything, was issued by the European Banking Authority, how all are connected. Whatever has to do with financing, whatever it is, goes to investors, which effectively are retail investors. They have all disclosure obligations and to state how they apply ESG risks, or how they were considered by a business. And okay, this is the same that we can post. Now, as the final note, I wanted to let you know about the sustainability linked loans. This is primarily goes for the banks, but that they give loans mostly. Okay, the funds as well, but the loans that there are structure, but then it's in each bank. As you set up the product for a loan, you can have this, it's a product. You have to consider what for you is considered sustainability loan as to give financing for such loan. Then on each bank, it doesn't mean that what HSBC does or Goldman Sachs does or Goldman Sachs or JP Morgan does, it's the same across the board, because it depends, again, we go back, what you consider as a business, an organization sustainable for you, that you can support it as an idea. Now coming to this is the video that we can share it, because as you see now that's raising for the ESGs, all the indexes now, firstly, have emerged about ESG ratings. This come from the stock exchanges. They have set up some principles and what they will consider as an ESG for them to give scores. There's a lot of scoring about it. It depends also what they consider as high, as low, and where you can list a product if you want products to be listed, if a product is to be listed. So this is where I will share it later to the chat. Highly suggested to have a consideration. It's a very short one, how they consider ESGs and ESG ratings. Just to close with a final remark, how everybody came, I'm sure you all know Larry Fink of Bloomberg, and this is what the first statement that was made in January, public statement that was made in January 2020, when BlackRock came out and especially stated how they will be looking investing as BlackRock. So it comes down to responsible investment by each. Is one thing what I offer to someone, and it's a different thing which is in parallel connected, how I'm doing an investment for me. And next to it, I've seen this is a statement of European Commission that connects customers, competition, and advantage to markets. So, some final concluding remarks. I hope we had the whole day and whatever you want to ask questions. It's becoming, just to let you know, for people operating in Cyprus who want to have business in Cyprus, the Cyprus Securities Authority, which is the competent authority in Cyprus under ESMA, it commits to ESMA, but it's not, I mean, the local regulator has issued and has published a specific section on their website, especially on sustainable finance. So for people offering products or they want to be licensed in Cyprus for this matter, they can have a look and we can ask whatever you want, we can advise. So the concluding remarks is that ESG is becoming an increasingly important topic for all organizations, investors and financiers. It's a big open issue, the penalties, which now the only way that someone can argue is that there may be mislabeling, misrepresentation, mis-selling. So we are expecting, as we said, the RTS for better standardization, although you have the basic articles, but you can use practices that there are no, but you have to check what fits your purpose, not because someone else is doing it, because someone may not be. The MCI ratings may be one based good for one company and the S&P to be good for another company. You know the internally. So it's not just only a responsibility, it's a change, it's a culture game changer. So it's about having the culture and as the compliance, because this is one, as a practitioner, one of our main headaches is that it's a new mapping area. Not that the companies or the organizations didn't have no compliance, but now all have to be connected together because you have the regulator's perspective or business objections perspective, and you have the customer's perspective and also the competitor's perspective that someone has to consider. The stock exchange I mentioned. Currently, as I said before, the stock exchange guidelines, the stock exchanges are now involved in a new initiative on their own. There's a new initiative. Now there are currently 56 stock exchanges across the world that they are participating in this platform voluntary, and they're issuing guidelines how to be listed. So if someone wants to be listed in a stock exchange, also will have to consider where and how and when and what is the benefit or what's gain. And just to close it is just also to consider product structure, how investment is made for your own and for your customers. When we're saying FMPs, financial market participants, is everybody at the end of the day. Everybody. We started now only with big, large entities or people offering products. That's why first people thought that it's hitting only asset managers, but it's not hitting only asset managers. It can get to you because of the business you may be doing. So just to close with that, compliance is not enough. It's not tick the box. We are over the tick the box era. You need to look beyond compliance and to see where you can make a difference. You all have to have a vision about being sustainable. Thank you.
Nicole, thank you.
Yes, I wanted to share this with everybody because I saw it when I was in one of the practices trainings in City 2 years ago. And I say that this is our life. Everything is loading and downloading.
It's still in the making.
Still downloading.
And also, as I see, the regulatory framework is something relating to ESG, at least, is something still in the making. So we have not seen yet the end of the finalization of the regulatory framework within which the firms will need to operate, but we have a good indication on where we're heading to. So what we're going to do now, I have some questions, and being the moderator, I can take advantage of my position and ask them first, but I will first like to go to the comments. And one is quite a technical one, and the other opens, allows us to take a bigger picture of this ongoing process. The first one, I would go with the technical one, and I'm not sure if you're aware of the answer. The participant asks whether we have any information as to when the EU non-financial reporting regulation will change to include medium-sized companies, meaning companies with up to 250 employees. I think currently it's 500, but I'm not sure. And are there discussions, to your knowledge, to also include non-public companies? Something.
Yes, I will. Yes, I'm aware of personally due to other hat, the legal hat. The plan is that effectively we cut the private companies, but first they wanted to go through the SFDRs and the regular technical standards. But there is a draft up and going, and there was a consultation on this. And definitely the private companies eventually will be included, but the problem is because it's a directive, it's not a regulation, it will come down to each member state how will apply it. For Cyprus, I know that for us, for example, in Cyprus, the 250 is already big. For other companies, it's not. So,
Well,
but there was a consultation going through ESMA currently. That was out from ESMA. I think the consultation, probably the reverse ended, I mean, the discussion, I mean, the exchange was ended, if I'm not mistaken, end of this January, last January. Okay, it was COVID and some were postponed.
Given your legal background, I think it would be good to briefly just to distinguish between a directive and a regulation. So, I mean, when we have a decision at the European level and it's a directive, what's the difference between having a regulation? If you would like just to make a small note on this technical issue as well.
Which is important, it's not small, it's very important. The directive means then has to come through a form of a local legislation, which effectively to be transposed, and then under the directive, under the directives, depending on which one, the member states have some possibility for derogation, and depends how they apply it. But effectively will be applied. But they have to see where it conflicts with other legislations they have and all this. So they go through the parliament. But in any case, there's a deadline, a time limit from European Union by when the directive has to be transposed. And then it's when you're hearing there's a big fight across Europe that they didn't have the time to pass it or they disagree and the penalties and everything. The regulation, when it's passed, is direct effect. This is the tricky point because someone says directive and we think it's direct, but it's not. It's the regulation that is direct.
They offer directions in the directive.
No, it's the directions in the directive, correct.
While the regulation is a direct effect.
We have to do it. There's no derogation. I mean, if you want derogations, you have to negotiate at the European Parliament level when all the committees go and all the governments go. I mean, before it comes down to be voted. I mean, before it's published. I mean, when it's the negotiation stage.
Yes. So now this was the technical question. The other comment made by one of the participants, Alexis, is no wonder why we had Brexit. It looks like a bureaucratic nightmare. We need time to digest and simplify what is needed to be done by each affected entity. Good for ESG consultants, but less good for asset managers. It is broad and unnecessarily complicated. Let's see how things evolve in this space. Just give me 1 second, if I may first make a comment, and then I will allow you to build on that. Well, Europe now, as I see the big picture, is trying to be a pioneer, trying to lead the way in this new era of environmental sensitiveness, of this new era of green economy, etc., etc. So, I mean, Europe may be making the first steps, and these steps, it may be a rocky road at the beginning, trying to implement things for the first time with all the standards, with all the technical considerations that you need to have in mind. But it will be the first one to do so, and the others will follow. I don't see how the UK will be able to, ignore developments at the global level and this shift towards environmental sensitiveness. So, I mean, maybe in the short run, the UK may not be under these tight time frames and these tight deadlines in order to download complicated and technical EU directives or regulations, but I mean, they will do at some point. So Brexit may not be the answer to this evolving area of ESG and corporate social responsibility. But okay, that's my intake on the issue. Nicole, if you would like to comment also.
I will go a step back. Primarily, I agree with Mr. Xenophontos, Alexis, allow me to call you Alexis, that indeed we had Brexit and we had other things. And the thing is to go a step back. Cyprus has common law. I'm talking about Cyprus, but it's across the board. Generally, the financial market service and the banking services are built around common law and around the background of city. Something that we forget, and we shouldn't forget it, and we'll see how it goes on, and it will go on, and I agree with you on this. It's a test of nerves, is that city has the background and has come through a lot and has the structures and the prudential and the people and the mindset, which is different from what is in Europe. If you will notice, and I think Alex may correct me if I'm wrong, if anyone wants to correct me if I'm wrong, a lot of the regulations we have in front of us now under Europe follow the sort of mentality and culture that was developed by the city before in the financial markets. The Brexit, as you will notice, after they realized that Brexit was coming, and we have seen that in the UK level, they are readily prepared to play on their own. They have a big market and the big assets, as they have the knowledge and they have the practical knowledge, not per se the fundamental knowledge. And this is something that we will see how they will use it and how they will manage to play with Europe. Because no matter what, if they want to be in Europe, they have to follow European rules, no matter what, and they have to apply. And this is one of the big issues that was happening during Brexit agreement and everything. And now it was everyone to go and follow new regulations and new agreements, but all are behind Europe, I mean the member states, and there's tripartite agreements. So it's a third country, Britain now, which though a third country with a very solid background on these matters. So it's something, I agree with you, it will be tested. Yes. And the risk is how Europe will respond. And the thing is to note, I was impressed how fast Europe on this market, on the financial markets banking side, because for me it's the same, they responded in applying many things fast, and publishing them and putting them into effort. The efficiency after 2016, actually the last 2 years, it's amazing on the matter. It's amazing. I mean, yes. What we have to comply, but I agree again with Alexis that we had Brexit, we'll handle this, and each of us has to find a way. And I agree, you have to be prudent and to be correct and try what ESG consultant means, because it's an open interpretation. Each of us has to know what they are looking for and where they want to go and what to achieve.
Yes. There's one more question now, and then I can share my thoughts and questions with you as well if there are no more questions by the attendees. The next one is, do you feel that the registrar of companies who is responsible for ensuring that non-financial disclosure regulation is applied is the most appropriate for this role, or would it be valuable to assign a sustainability commissioner? What is the best practice in other countries? That's a nice question. I don't have an answer.
That's a very nice question, and I don't know who is anonymous. If we can find it, if they can tell you the name, very to the point. A question very to the point, and we're facing this because there is in the reports. Okay, other than the public listed companies that have to do it under the stock exchange. I mean about Cyprus, but in abroad, but I'm talking about here. And the other one is indeed is stated the registrar, but effectively, as the law is now drafted, it gets only the big companies, which the big companies as the listed companies, or the big companies that they have state ownership. For example, EAC, the Electricity Authority, all these. SIDA, exactly. So de facto, under the regulation for their accounts, they have specific, we have transposed, I was part of that transposition, and we had specific amendments, how the accounts have to be presented. The thing is that indeed, the regulatory on one side is the registrar, because it's where you file the statutory accounts, but until it comes to the private companies, it's the shareholders who will check, and then all ends up back to the directors. The problem is that the registrar is very good. It could be, but they have to have special assigned task force, which currently now we're running with the AML. Hopefully, eventually we'll do it, or maybe a sustainability commissioner. It will be a good idea, but it depends how we'll fit with the other competent authorities, because you have the SISEC, which is the Cyprus Securities Authorities. You have banks, which is under the central bank, which if it's a systemic bank, then all documents are reported to ECB. Not that they're not reported here, but it's a puzzle. But it's a very good thought, and it has been discussed, to be honest, but I'm not sure now. I'm not involved anymore on that discussion.
Do we know
I was involved up to passing the law then in 2017 as member of the Cyprus Bar Association and the team to be compliant with the European Union and to make sense.
Do we know what other countries do? I mean, what's best practice?
Yes, yes, I know. I happen personally. I'm
Are
more
there any
familiar
examples
with
that you can share? Yes, the UK.
With UK, because I know it, because it's the FCA, everything, because it has to do accounting. All this matter has been assigned to the FCA, because all the big companies are to the somehow some regulatory and the FCA, but then it comes down back to the accountants. And then when the reports are signed, which are signed by the directors, and you file the reports, you have to have them in your annual report. So effectively, it becomes a compliant issue.
Yeah, but what about, I mean, FCA? Okay, yes, that's well
for other ones. I think I'm not sure. Luxembourg, I think, has the same, something similar.
Okay.
It comes down to the accounting at the end of the day. In the director's report, that you include your accounts, but it depends. You have to consider in each country what we mean director's report, because you may have 2 or 3 versions of a director's report, and then to be mixed and to be connected. This is the correct, to have one director report. Yes. Because definitely the director report is not the same for a listed company, for a private company, which is a big company, but it's a private company.
Yes, yes, definitely. And we have another question.
I don't know if that answers or it gives feedback.
No, it does to a great extent. And then we have another question. What is your take on integrating SMEs in the sustainable finance journey, from disclosure and reporting to public and private financing tools and products?
In countries like Cyprus, this is what will be. But to be able to include them, we need to clarify what SMEs is for this country, because if you take the SMEs definition under the European Union, all regulations, in countries like Malta, Cyprus, Luxembourg,
yes,
they don't fall. So it will come at the beginning. If what is considered, for example, we are setting up a project, a product, if it's a loan, as to include them and how to finance them, it will come down to the banks and to the asset managers if it's a fund. That's why I said before, the example to have, I will share with the chat the videos. It's very short videos, everything, because nobody wants to pick things more than 1.5 minutes, is the EU sustainability bonds. It's a very good structure. And they have financed a lot. Mostly they're focusing now on climate change, because, as we said before, it's the first priority of European Union because of the Paris climate change agreement, but it doesn't mean that they cannot finance everything else. You cannot go and support a sustainability bond or a sustainability fund or a sustainability project as to see how you'll finance, because then the funds will go to the investors. So you will have to present something, what you will present. And at the presentation is where you will say the investment policies.
Yes.
So it's a very valid question, and a valid question. I mean, it's a very genuine, and I share the view.
Yes. Okay, we don't have any. I'll leave my question. I mean, I can ask you now, since we don't have any other questions, and we still have time for one more at least. So I will take the chance now and ask you, from an outsider's point of view, when looking at this shift towards a greener economy and green energy, the Green New Deal, it's much easier to see the tangible effects this will have on other industries, such as the chemicals industry or the manufacturing, where they, through their production of actual products, tangible products, they will need to make a shift to a more green outcome. I mean, you went through the regulations and they touch a lot on the financial industry and the banking. But I mean, just to recap now, for me as an outsider, while I can see the tangible effects on the chemicals in the manufacturing industries, how can I see this in the banking industry? I mean, the banking industry does not produce, I mean, it does, but it's not that it produces goods that are tangible. Or, I mean, I can see that they can save up on electricity, save up on paper they use, etc. But how else are banks to be affected by this? If you can offer us your insights and your view on this issue.
I tried to find this, we called it before, is the notion of the circular economy. I agree with you because it's connected. What all started and they came up to this, what you wanted to target primarily with the products is the greenwashing. Because we have seen, and in the forums we have been attending and everything as the representatives of Cyprus in some of the forums, is that people baptize product as green product, but effectively it is not per se green product. That's why it came the eco-labeling and all that. I don't know if I can go back, but on the slides, I don't know, we can go back to the slides. So just a moment. Here. Sorry, just a moment. Is the notion of the circular economy, which is effectively where everything, the notion started. So the thing is that you don't want to have banks or funds that they will discussively finance non-sustainable products as to support greenwashing, because some people will label something green product, climate friendly, which will not be climate friendly. So that's why they came out and say the notion is I tackle the financing, where's the money? Where's the capital markets union?
Just to make a brief comment on that, to make it clear, when you are a bank officer that approves loans, you need to be compliant. And if you're going to be compliant, it means that you cannot approve a loan to a company that uses coal, for example.
So that's, we go back. Exactly, this is it. Before you come to approve a loan, you have to see what is your policies. What is the product you are offering? You're offering a loan. The loan may be called retail, may be called for cars, may be called for example, you may have in a loan, if you go and get an electrical car, provided that you have the facility to support it in the country, that you will get a better interest rate. You may get a better expense rate. So you will get client, you become more competitive. So that's why I said before it's three. Yes, it's competitor, it's everything, it's a puzzle.
It's a puzzle. That was great. I need to
cut. That's why I like
it. Because you have two more questions, and I hope that we have the time to look at them. One says that given Cyprus ESG ratings, the SME's involvement to achieving improvement is important. It could facilitate. I need to make sense of this. Let's go to the next one, and then I'll come back to this one. Do you think that the carbon tax will help our transition to a green economy, or are we not ready with accessible alternatives yet?
No, it will be, and I agree with that. But then, please get me a task force, and I mean from all ministries, of all the issue in every country, and we see it is not only Cyprus. You need to have a vision where you want to go and what you want to offer, because it's one thing to come and say someone come and make a sustainable investment. Then he will ask you, think about it. You are all
professional
business people. Okay, we'll say what I get from this. How do I register? What will cost me? Where do I have to go? Which authorities I have to see? You need to give a map to the person. And I agree that it could be a diamond. and it is a diamond, but we have to set, I mean, each government is not private only, it's collaboration between governments and private sector, and to be an action plan. I believe we can do that.
Sorry for interrupting all the time, but we have more questions coming in, and we need. I hope that we'll be able to answer them. The other one was actually suggesting, rightly so, I think it makes sense, funding incentives for the SMEs so that they're able to facilitate efforts, and this funding incentives could be through the banks.
Through the banks, we could. This is a good idea with it. With GEVE, or I'm talking about Cyprus, about the
Employers Association. The Employers Association.
The Employers Association, everybody to sit down and to create a product, and then to proceed. Because I saw another question for the carbon tax. Of course, we're in favor of carbon tax, but the carbon tax is not just to pass the law. Is we have to know how we'll apply it. The problem is not the laws. The laws, we have them. Is to to be able to apply them.
We need a culture also, and
the culture. Thank you.
Yes, we need
it's a vision,
culture.
It's a culture, and all have to work together. It's a teamwork.
Yes. So when we I'm
expert on one thing. For example, you are expert on another one. Someone else is another.
Thanks. When the time comes and the Employers Association voluntarily sit down to discuss the ESG, it will be a very tangible proof that we have a change in culture.
They have no option because the companies are doing already. They will
have to. The key for me here is that they do it before. That's proof of a change in culture. Otherwise, if you have to do it, then you will have problems in the implementation.
I couldn't agree more with you. That's why we'll try.
Yes. Okay. Yes. That's a huge challenge for all. Lisa, now one question by Lisa is: what should investors be looking at when deciding on where to invest besides the ESG score rating?
The scoring of the product, the scorer of the issuer, which is not ESG. They have to check. They have to compare. It's personal views. This depends. No, this is personal, guys. It depends who's your asset manager, but the general concept is, as you invest, as you go buy a car, you say, I have this I want this, I want this. We've seen it recently in the McKinsey latest report that people on questions, but it was anonymous and they replied, they published it, that people that used to invest in some form of products, when they compared it with other similar products, they wanted their investments. They looked the stakeholders, they looked corporate governance, they looked compliance, they looked publications. I mean, how many information they had. Okay, that's why we go back. How artificial intelligence is very important to get good data, correct data, because whatever data you collect, then you have to be able to screen them. So you will see who provides data, what data, how they're collected. Which then we come to artificial intelligence and other issues.
Yes.
I'm not so familiar with everything, but it's my job. So you have to be able to connect the puzzles. We're not expert in everything, but at least we know what is coming from where.
As you said, each organization, I mean, especially the large organizations, should have their policies public. So you can easily go and see their policy on ESG, on corporate social responsibility, other stuff as well, and compare them with other companies before making a decision, the ratings. But still, this comparative framework is there's no one single rule. It's not like accounting reports that you can easily compare figures yet. We're not at that stage yet.
No.
I think we will get there at some point.
Europe, as you said, had to start, and also what Europe wanted to be the pioneer, to be first.
And we should be proud about it.
US still is not. US is still in a mess. I'm telling you honestly.
No.
And it's good that I see a chart. I don't know, but it's Maria Gathocleus, the comment. She
nailed it.
Pointed it.
Yeah.
What I said, Major said, and everybody, it's the retail investor, which is the retail investor. It's the market. I mean, it's the consumers. they will force the change. How and when, we will see. Oh no, it's happening. It is happening. It just, in some economies, because they are smaller economies, you don't see it that fast. And because they have to comply, you will see it fast in just 1 month. Effectively, you have to. And you have the big economies like UK, Norway,
the Scandinavian,
Holland, and Brazil is different.
Like overall, it will be it may prove to be a a burden, a regulatory burden for companies to comply, but it's something we should be proud of overall. This European initiative to become a greener economy, and we need to see the bigger picture and the greater good that will be made to our society and the economy also. Just one last, let me see if we have another question. We do actually. So another anonymous attendee here says that when it comes to financial markets, it all boils down to investors expecting capital gains, which drives eternal pursuit of growth. How can this be tackled through sustainable financing, since eternal growth is obviously not sustainable?
Valid point. This is where it comes, and this is one of the biggest challenge of all, how internally to tackle this. It's an internal thing for everybody. It's not, there is no magic recipe. I will tell you an example. HSBC across globe has set up specialized team to consider all units are connected. And they have one unit in Asia, one unit in Europe, one in the States, and they try to see how they will do it, because for the market, it comes down to gains. But then you want to be compliant, and you don't want to be exposed, or then to be compliant, but doesn't mean that you will not do one product because you will do something else. And in the articles, in the regulation, this one that we have now, but talking now currently, there is a provision for now until the technical comes out to say comply or explain. So it's a thin line for each organization. I mean, for the asset managers, I'm replying to the question, how you comply, or if you are not complying, why you are not complying, and what you will present, and how the investor will see that, perceive it, because it's open. So you don't know who are your investors, unless you have a family firm, or you know what I mean. It comes down to people and critical thinking and culture. My personal view.
It is an issue of culture, definitely.
And it's not only in Cyprus, everywhere in the world.
No, it's a global issue that we have to deal with.
Globalization.
Exactly. Now we have a question. No, it's not a question actually. No, it's a question, but it's EIMF related. Yes, let me just say that we are currently designing new trainings and certifications of sustainable finance, and we shall be soon offering them. What else? I mean, we have no more question. We are just, past our 1 hour duration that's for the seminar. Since we don't have any other questions, I would like to take the chance again and thank you, first of all, our presenter, Nicole Finoboulou, for taking the time to present this topical issue and for answering all our questions in a very diligent manner. And I would also like to thank all the participants. Most of you have stayed with us throughout the presentation. It seems that, we did something right in order to keep you with us for almost just a bit more than an hour. I hope to see you soon in our future webinars. We have a number of webinars planned in the next weeks coming. So let me wish all of you a pleasant afternoon. Thank you once again, Nicole, and thanks everyone for taking part in this presentation. Have a nice evening, everyone. Thank you very much.